at some point, not day for day, tick for tick, but general trends are there. You'll see gold actually do better. I actually think we'll see a new high in gold by then. Not anything like $200 more than its old high, but a new high. And it might get there and pull back. I don't know. It's already triple topped around that area. I think it'd go through it. And I think silver still, as much of it's been beat up this year. I think 26 something was the high in early May. But regardless, I think you could see, better prices for silver as well. This time around, it looks like gold's got to take the lead before silver will come on board. Although,
despite the day-to-day fluctuations seen in the prices of precious metals, the overarching trend for gold seems to be heading in a positive direction. According to David Morgan, gold could reach a new high, although not necessarily exceeding its previous record by a significant margin. Silver, on the other hand, has faced some challenges this year, but might also see improved prices. Regarding the seasonality of the gold market, David notes its historical pattern of hitting lows during the summer months, often in August. In August, gold prices experienced a 2.2% decline, following a 4.1% jump in July, and are now 7.7% higher for the year. After scoring the strongest settlement since July 19th, silver for December delivery declined by 29.2 cents, or 1.2%, to end at $24.812 an ounce. Silver prices moved 0.6% lower in August after soaring 8.5% in July. David acknowledges the potential for significant downward or upward movements in the gold and silver markets, contingent on market dynamics. Gold eased on Monday as the U.S. dollar stood strong after U.S. Federal Reserve officials flagged that interest rates would remain higher for longer. However, moves were limited as investors look forward to inflation data later this week. However, he underscores the possibility of a shift in the equity market come October. If equities undergo a substantial downturn, he expects gold and silver to follow suit, given the considerable leverage inherent in financial markets. Despite silver's price fluctuations, potential U.S. interest rate hikes remain uncertain. Additionally, the imminent release of significant consumer inflation data introduces further unpredictability. David refers to the phenomenon where silver will scare you out or wear you out, suggesting that it can create buying opportunities for patient long-term investors. Now, let's watch the excerpts from David Morgan's interview with Liberty and Finance. But before we do, if you want more videos like this, hit the subscribe button and turn on the notification bell for more updates. Thank you, and enjoy the video.
The other commentators, we almost always get a summer doldrums. There's been exceptions, but there are exceptions. The seasonality is very strong in summer months. Gold usually hits its low in August, which was close to this year. And then it's not an immediate September 1st. It starts coming back up, although generally speaking, the last quarter of the year is generally good for the gold market. I think what's going to happen is we've got this purported end of money for the U.S. government by the end of September. I haven't looked into it real deeply, but I've got it from good sources. So if this is true, there may be an emergency meeting of the Congress critters to, fund the government again. Regardless of whether any of that takes place or not, I do think and have been saying for some time, and I could end up with egg on my face, which is fine, that October we would see some kind of market shift in the equity market. So if I'm right, and we see equities come down in a substantive way, then gold and silver will follow or all come down at the same time. That's because there's so much leverage in all the financial markets. Everything's basically computer programming with algorithms and AI. I mean, the Aladdin program that works for BlackRock, a lot of people don't even know about it, but it's been running the show for quite some time. So the idea is that I expect to pull back and everything. So I think the gold and silver market may just kind of be biding time until a clear direction is given. For example, I'm correct and they get pretty sharp spike down, or I'm wrong, and maybe the market does better than I expect, and the gold markets and silver markets start to move up. What's frustrating to me is being, I'm a student of the markets my whole life, and I'm learning more. But I don't recall seeing a market like gold or any market where we're within about 10% of the all-time high. and the sentiment is so bad. If gold was down at, 1,500 or 1,600 or something like that, I could see the sentiment being where it's at, but it's not. It's basically hanging in there, as you said, and it's within striking distance of the all-time high. And yet everybody's got a long face like it's trading at very low price. I mean, both your major gold companies have a pretty good margin and they're making money in fiat terms. And that's not true in the silver market. I mean, depending on how you figure all-in sustaining costs, we're anywhere between $22 and $25 the ounce. So most of these silver producers are not making money, or if they are, they're not making much. So, you could be glum if you're a silver investor for the right reasons, meaning, it's really not doing well relative to what the costs are. But gold's a different story. And yet, from what I see, the sentiment's low. So I just want to make that comment because, again, it's unusual to see something, but I think the reason is that it's just doing what that famous, I know it's famous, that adage that I coined so many years ago, that silver will scare you out or wear you out. It'll just go sideways in a trading range for so long, you just get bored, you give up, you sell out, or I'm never buying the silver again, whatever, because those are perfect times to accumulate if you're a long-term investor. But a lot of people in the world of investing are really not that patient. Some are, but a lot aren't. And I think silver still, as much of it's been beat up this year. I think 26 something was the high in early May, but regardless, I think you could see, better prices for silver as well. This time around, it looks like gold's got to take the lead before silver will come on board. Although fundamentally, silver's got every reason in the world to lead gold because there's so much demand on the electronics and solar side, and the investment demand ebbs and flows, but it can change in a heartbeat. And you can go from what you're already aware of, where, the retail dealers are actually having a pretty tough time sourcing metal in a timely manner. And then, of course, as I said, people are wearing them out. It's like, I don't need any more. I better sell some back or whatever. Anyway, back to you.
Federal Reserve officials on Wednesday signaled support for another rate rise this year and fewer cuts in 2024, even as the U.S. central bank held its benchmark interest rate steady at a 22-year high. The forecasts showed policymakers hardening their commitment to a higher for longer approach to interest rates. David emphasizes that gold can perform well in an environment of rising interest rates, and the real rate of return is what truly matters. David believes that when the Fed reaches a point where they acknowledge their inability to control inflation effectively, and they let the dollar's value decline, it will trigger significant moves in the gold and silver markets. Inflation staying stuck above the Fed's 2% target remains a greater risk than tight central bank policy slowing the economy more than needed to bring the pace of price increases under control. Chicago Fed President Austin Goolsbee said on Monday, "The risk of inflation staying higher than where we want it is the bigger risk," Goolsbee said in comments on CNBC. "We've got to get inflation back down to target. We ought to have 100% commitment." David predicts that within 3 to 6 months of such a scenario, the markets will respond by driving up the prices of these precious metals. Let's get back to the interview.
Well, interest rates do drive it, but not to the extent, and I've said this on your show before, to the extent that some people are taught to believe by the economic establishment. That is that, any increase in interest rates is very detrimental to gold. That's not true. Gold goes up in an increasing interest rate environment for quite some time. And the only time interest rates really take power over gold is when you have a real rate of return. And if the real inflation rate's, say, 7%, and you're only at 5.5%, then you're actually still yielding a negative 2% or so in real terms. So until you get a real return rate, then it can have an effect on gold. But there's so much funny money out there now that even if it did get to, say, par, we got to 7% interest rates. I'm not saying we will, but if we did, you'd still be break even, which is better than losing 7%. But so it will have some effect on a knee-jerk reaction, but over time, you'll just see gold continue to march up and up and up. So again, I think it'll be higher by the end of the year. The Fed is doing everything they can, not only in real terms, meaning they are increasing interest rates, but is also the rhetoric. And you'll see them start to shift more and more, meaning that they're going to retarget. The 2% won't be the target. They'll modify it and say, well, really, under current conditions and the supply chain and the illness we had, and they'll make some excuses and they'll say, we're going to shoot for, pick a number, 3%, maybe 4%. Who knows? I mean, people as old as me know that Nixon put on wage and price controls at 4% inflation. I mean, back in the 70s, we thought 4% was such a high inflation that the government installed wage and price controls. So put that in your, thought process. But things change. They're conditioned to believe that, a little inflation's good and all this other nonsense you hear from the Keynesian economic model, which isn't true, but can look true for quite some time. So I'm probably off topic, but I call them as I see them. I really think that the gold markets will take off, silver as well, when they throw in the towel. When the Fed says, well, we've already printed umpteen trillions of dollars over the last couple of years, and we are seeing inflation now, but the economy is so bad, we're going not only to pause, we're going to cut. I don't see that happening for a while, by the way, but at some point they probably will. And that's sort of a signal to the markets that they've given up. They've given up a tight monetary policy to defend the value, the worth, the price of the US dollar. And they're saying, we're just going to let it go into the dustbin of history like all fiat currencies have. When, if that takes place, and I'll say more like when, it won't be instantaneous, but within 3 to 6 months, the markets will understand that they've given up. There's no hope alive that this dollar will last in its current form for much longer. And that's when you'll probably see the metals markets really, really move.
According to Trading Economics' global macro models and analyst expectations, gold is expected to trade at $1,947 by the end of this quarter. What are your thoughts on potential gold and silver prices in the coming months? Share your observations in the comments section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks for watching.